So today I want to try something new. In this video, I'm going to be rounding up what has happened over the past month in traditional markets and the cryptocurrency markets. We'll be talking about price movements and the news stories which have led to these price movements. As I say, I've never actually done one of these videos before, so I'm really keen to hear what you have to say. I'd like to start doing it as a monthly thing because I think there's some people out there who may choose to tune into this to get a roundup of what has happened over the past month. But it all comes down to your feedback, so please let me know in the comments section what you think. If you'd like to see this as a monthly thing, let me know. If you never want to see this again and you'd rather just watch the traditional videos I make, let me know that as well. Any feedback, positive or negative, would be greatly appreciated. Anyway, let's get into it. Here we can see the S&P 500 index. This is a measure of the 500 largest companies in the US, so it gives us a good overview of what the US stock market is up to. We began the month at 2,830 and have climbed to 2,955, so a 125-point gain. It's a few percentage points, which is surprising maybe considering everything that's going on, but certainly nothing to shout home about. Now we have the UK stock market. This began at 5,760 and is now, at the time of recording, approximately 6,060. So a 300-point gain, and again, a pretty similar percentage number. Nothing too crazy in either direction. The majority of this video is actually going to be focused on the UK and the US. I'm from the UK myself, and the majority of you are from the US. But I think it's important to understand what's going on in the rest of the world too. And that's why we have the World Index, which, well, the clue is in the name. It's an index of what the entire world stock markets are up to. It has climbed over the course of May from approximately 314 to now levels of 324. So again, a couple of percentage points, but nothing too crazy in either direction. Next, we have the cryptocurrency price movements. So the entire market put together began the start of May at 245 billion. And by the end of May, it's 248 billion. So basically a very, very similar number. A slightly smaller gain than the traditional stock markets, but a slight gain as well. Overall, it's a very steady number, pretty much flat over the course of the month. Now, obviously, it has gone up and down over the course of the month. It is cryptocurrency, it's extremely volatile, but the beginning point and the starting point are pretty similar numbers. Next, we have the entire crypto market minus Bitcoin. So this is all of the altcoins added together. This number began at 84.6 billion and it's finished at 85.6 billion. So a $1 billion gain, approximately, what's that, like 1.2, 1.1%. Again, a very small gain, but really pretty much trending flat over the course of the month. Now we have Bitcoin. Bitcoin has tried to climb over that $10,000 hurdle over the course of the month, but has fallen away on a couple of occasions. And overall, it began at 8,780. It is now 8,880. So a $100 gain. Again, a very small number, very similar to everything that we've seen so far. And last but not least, we have Ethereum, before we move on to talk about some of the news. Ethereum began the month at a price of $211 and has finished it at a price of $203. So it's actually the only asset which has fallen in price over the course of the month that we've just looked at. But I would add that Ethereum had a pretty incredible month leading up to this, so it was probably due a slight pullback. Now let's talk about some of the traditional finance news. So the first story may be the craziest. That's that the UK and the US are headed towards negative interest rates. And I'll be honest, when I first read about negative rates, I just couldn't quite get my head around it. For example, why would you go to a bank and give them your money and then pay them on top? You're giving them your money. Surely they should pay you an interest rate. But a negative interest rate means that you have to pay them to give them your money. That just doesn't sit right. How would that make sense? But there's actually 41 banks in Germany right now where they are charging customers to deposit money. So this isn't just theoretical. This is happening as we speak in one of the largest and most developed economies worldwide. There's also negative interest rates in many more countries as well. So again, this really isn't just theoretical. This is something which we could see in the future. In the UK and the US, we may be charged money to deposit money with our banks. And for the US, it's predicted by next April, according to the futures market. For the UK, it is December of this year. So again, we're not even talking in the too distant future. For both countries, this could happen in the next 12 months. So what is the point of it? Why would you want negative interest rates? Well, the idea is to lower borrowing costs. As a result, it's cheaper to borrow, there's more loans in the economy, and when more people can take out loans, they can take on more risk. More people can start businesses and take out mortgages, which generally stimulates the economy and leads to more growth. But this isn't without downside. There are some risks to this as well. One of these risks and problems is that it means that banks can make less money, which I know, again, on the surface doesn't sound like such a bad thing. But the truth is, if banks make less money, they're less likely to loan out money to people like you and me, and that can slow down the economy. So there is a real fine balance in terms of getting these rates right. And negative interest rates, again, there's something which has been created relatively recently and it hasn't really been proven yet. That's why the Fed has consistently been saying, Jerome Powell, the chair of the Fed, has been saying he doesn't think negative interest rates are a good idea. He says they're unproven and they have many other tools to use. But the futures market is predicting this is going to happen, and the president, Donald Trump, is certainly calling for it. So whether we have negative interest rates is going to be interesting to see. The US looks like it's maybe further away. The futures markets are predicting April 2021, while for the UK it's being predicted in December 2020, as we can see here. And also, England and Europe are talking in a much more friendly way about negative interest rates. So I think it really is just a matter of time. In fact, the UK has recently sold their first negative yielding government bond. Again, this doesn't really sound like it makes sense, but they've sold £3.8 billion worth of 3-year gilts at a yield of minus 0.03%. So in other words, people have bought these bonds off the UK government and then they pay 0.03% back to the government. So even though they're loaning money to the government, they're also paying for the privilege of loaning money to the government. It really, I know what you're thinking, it really does sound quite messed up. This doesn't sound like it logically makes sense. So I've actually released a video recently called How Negative Interest Rates Affect You, which you can see here. I'd recommend you check it out because it explains how all of this makes any sense and importantly breaks down for you how this could impact you. So I talk about your mortgage, your savings, your car loans, and things like the economy, the stock market, and real estate. I put these 6 factors into perspective with negative interest rates by looking at how these rates have affected other economies from these 6 important ways to determine how this could impact your life. So if you want to learn more about this, because it is likely coming and it's probably not too far away, make sure you check out this video. Now let's talk about Warren Buffett, because at the beginning of this month, he decided to sell all of his airline shares. And you're probably familiar with this already, so I won't go into too much detail. But basically, the gist of it is that he previously held about 10% of the 4 largest US airlines. Those were United Airlines, American, Southwest, and Delta Airlines. But then he sold all of his shares in one go and said the world has changed for airlines. And he basically was making the point that with some businesses, you can reduce the costs. So let's say there's a business which in a year from now may get to 80% of the money they were making a year ago. Well, if they can bring their costs back down, they can start making a profit again. Yes, they're making less money than they were before, but as long as they're spending less, they can still make a profit. Airlines have invested heavily into things that they can't sell, things like aeroplanes, so they can't realistically bring down their costs significantly. They also can't really increase their revenue. They can't try and make more money, because ultimately their revenue comes from people flying, and people are less likely to travel with everything going on in the world. So they can't really change the 2 factors, the money they spend and the money they make, that much. As a result, it's going to be quite difficult for them to make a profit for some time. So Warren Buffett made a huge statement by selling all of his airline shares, which took the stock market and many people like me by surprise. Now let's talk A little bit about politics, and I don't want to get political in this video. I'm never really going to do that. The only point I'm trying to get across with this is that you kind of have to go into politics a little bit because it impacts investing. So we'll touch on a little bit of politics from that perspective. So the US has pulled out of the Open Skies Treaty. This was a treaty allowing unarmed surveillance flights over member countries, with 35 nations signed up to it. The administration said Russia had repeatedly violated the pact's terms, and that's why Donald decided to pull the US out of it in the end. And then we have China and the US. So to quote the Chinese foreign minister, he said, "China has no intention to change, still less to replace the United States. It's time for the United States to give up its wishful thinking of changing China and stopping 1.4 billion people in their historic march towards modernization." He said US political attacks on China over the coronavirus and global trade matters are taking China-US relations hostage and pushing our two countries to the brink of a new Cold War. So that's a pretty bold statement right there, saying that they're pushing the two countries to the brink of a new Cold War. As I said, I'm not going to get political. From the UK myself, so I obviously have a lot more affiliation with the United States, but I'm not going to be taking any sides. My only point really is when you're thinking about the stock market, we saw obviously there's a China-US trade war, and even fears of it had a negative impact for the stock market. So things like this are beginning to ramp up more and more, and we're going to see this virtually every month, I expect. And it could lead to some pretty major changes over the next few years. In fact, let's look at what Ray Dalio has to say about it. And to be clear, while I obviously have thoughts on these topics, I don't expect you to trust me. I'm just some random guy on the internet. And quite frankly, I'll hold my hands up and say that when it comes to politics, I do research it. But God, I don't know anywhere near enough to simply sit here and say that this is what's going to happen. Instead, what I try to do is try to present what the smartest people in the world, people so much smarter than myself, are saying. That's how I can really give value to you. And that's what I'm going to do here by talking about what Ray Dalio, the largest fund manager in the US, has to say. He manages 140 billion, and he's an incredibly smart guy. He's actually been talking for some time about the changing world order. This is an article from March 25th, but obviously is appropriate for what I'm talking about. I'd recommend checking it out if you haven't already. So he makes a point here saying that China has become a competitive power to the United States in a number of ways and is growing at a faster rate than the US. If this trend continues, it will be stronger than the United States in most of the important ways that an empire becomes dominant, or at the very least, it will become a worthy competitor. For some time, he's been talking about how this period of time looks very close, very similar to the 1930s, which was obviously leading up to World War II, so it's a quite scary thing to really consider. But he's saying that what's playing out in the world with the likes of populism and the potential tensions building between certain countries and the rising power which we're seeing in two different sides of the world is very similar to the 1930s. So as a result, this should impact how we invest, because we're leading to more uncertain times, and that tends to push us towards more uncertain investment types. Again, I have a video on this topic called Ray Dalio, How to Invest Safely in 2020, which is a thorough breakdown of how he's investing his money into the market right now, which is incredibly useful for someone like myself. Someone who's just trying to improve my financial situation. I live with my family currently, and I just save up money wherever I can to try to invest it into the market and grow that pot over time. If you're trying to do something similar, maybe you don't live with your parents, but maybe you're just trying to grow that pot over time, then I think one of the best strategies is to analyze what the smartest investors in the world are doing with their money. They can give out incredible advice, and we can use it to try to improve our personal investing. That's why a lot of what I do is trying to break down what these incredibly intelligent people are saying and then presenting it for you. For example, I have an upcoming video which is not yet released, that's why it says unlisted here, which is Ray Dalio explains why cash is trash. And again, it's breaking down his thoughts on what people should hold instead of cash. So if you like this kind of thing, if you like understanding what the best investors in the world are doing and saying, then this could be an interesting channel for you. You might want to consider subscribing, because that's where I focus a lot of my attention. So if you do want to be a part of this, consider subscribing and join the community. But anyway, let's carry on and let's talk about what the Fed are doing with junk bonds at the moment. Basically, a bond is a fancy way of saying a loan. So when you hear the term, a company is selling a bond, just think of it as a company is asking for a loan. Well, the Fed has decided to step into the bond market for the first time ever. In other words, they are going to be loaning money directly to companies, or buying their bonds, whichever way you want to describe it. This has never happened before, and there's a lot of controversy around it, with the likes of Warren Buffett saying that we don't know how this is going to play out. So it has been a boost for the stock market in the short term, with them stepping into the bond market, but it will be interesting to see if there are some bad results which come in the long term. For regular people, the second stimulus check is going to be debated this week. So there's already 36 million people in the US who are out of work, and a second stimulus check is going to be debated, and I would say has a good likelihood of being approved, as most people in the US are struggling to get by with their first stimulus check. So another one could well be on the way, but this will have to be debated first. Speaking of unemployment, Kevin Hassett, a senior economic advisor to President Donald Trump, said in an interview recently that the figures could reach north of 20% soon, which is obviously horrible to hear, and it's similar to the levels achieved, or not achieved, but the levels reached in the Great Depression in the 1930s. And it kind of is crazy because if we go back to the stock market, this just isn't being reflected. So as we can see over the last month, it's gained some points. If we look at the year to date, yes, it is lower than it began the year, but let's look at the last 12 months. We're at 3,000 today, and 12 months ago we're at 2,800. So somehow the actual economy, the number of people unemployed, is clearly quite awful and is horrible for the average person. And yet the stock market doesn't seem to care, which doesn't really make any sense until we continue and we listen to what someone from the Bank of America, has been saying. The central banks have created a fake market. As he says, governments and corporate bond prices have been fixed by central banks. Why would anyone expect stocks to price rationally? So in other words, because the Fed has the ability to print a lot of money and they're stepping into the markets, they can stimulate the market a hell of a lot, potentially much more so than the people who are shorting it or the people who have simply decided to leave the market. The Fed has an incredible amount of buying power. And when it comes to the stock market, I tend not to give any advice because honestly, I don't think I'm smart enough to really analyze what's going on. But I do have instincts, of course, like anyone who's interested in this. And what I would say is that my instincts, all of them are basically screaming at me that the stock market has to crash at some point. We're seeing the economy take a horrendous hit, unemployment rates are ridiculously high, and people are saving more money than ever. So the stock market can't possibly continue to go up, right? It has to drop. But the truth is, the central banks are apparently keen on it not going down, and as a result, you're kind of betting against the central banks if you short the stock market. So while my instincts are, would it be interesting to short the stock market? I then have to consider that I'm betting against a central bank. So you have every single economic reason for it to go down, and then you have the central bank. And deciding which one is going to be more powerful is very difficult to do. So as much as you maybe may feel the same way that your instinct is that the market's going to go down, I would say it's not a simple yes or no. It's not a simple it will drop. It's not a simple it will rise. There is very strong forces in both directions. So please, whatever you do, just be safe with your own money and maybe consider a few market hedges. That's something that I talk about in some recent videos because they are uncorrelated to the stock market, which means if the stock market crashes or it goes up, you bring your total risk and return in a narrower band. So you're a bit safer with your money. That is actually something I covered quite extensively in that Ray Dalio How to Invest in 2020 video. So again, that's going to be in the description. If you'd like to check it out after this, feel free to do so. But we're going to continue. We're going to talk about the fact that young people are rushing to leave big cities in favor of less infected suburbia. So again, this is a trend that we've been seeing with more remote working. people are more keen to move away from the city centers and live in cheaper areas. It's going to be really interesting when everything kind of goes back to normal to see if this becomes the new norm. Because yes, of course, there are many people who love to live in a city centre, but I think there's also a large number of people who would prefer to live slightly further away and maybe save a bit more money because it's less expensive away from city centres. And if they can do remote working, then they don't have a long commute from out of the city centre. Well, people might consider that more favourable, to save a bit of money, to live in a slightly greener area and not have to worry as much about a commute because they're remote working. It'll be interesting to see if this kind of trend continues even after everything kind of begins to shift back to normal. Now we have Ray Dalio talking about cash being trash. But again, I am going to be covering that in an upcoming video that you guys can see here. It's already uploaded, it's already edited. It'll just be out in the next couple of weeks. So if you do want to catch that, make sure you are subscribed. Next up, we have crypto. And we're going to kick it off with one of the biggest news stories I've seen for a long time. One of the US's biggest investors has just invested into Bitcoin and shared this with the world. Paul Tudor Jones, the manager of the US's 19th largest hedge fund, has invested 1 to 2% of his portfolio into Bitcoin. To give some context, they manage about $40 billion of assets, which for someone like myself, like I say, that lives at home, it's just mind-boggling kind of figures. So he's incredibly well respected. He is one of the prominent investors in the US, which is basically saying one of the most prominent investors in the whole world. And he's invested into Bitcoin and shared this with everyone. So it de-risks investing into Bitcoin for other fund managers, because now when they bring up investing into Bitcoin, they might not seem as crazy because someone like Paul Tudor Jones investing, it really gives more validity to considering Bitcoin as an investment. It all comes down to how he has graded these assets. It's based on 4 factors: trustworthiness, liquidity, purchasing power, and portability. And he's graded 4 different asset classes on these criteria. We have financial assets first. They gained a score of 71. Gold was next with a score of 62. Fiat cash was second with 54. And Bitcoin was bottom with 43. That doesn't seem right. Bitcoin was bottom. Okay, well, there's a little bit more to this. Essentially, it comes down to the valuation of these different assets. So yes, Bitcoin might be the worst in terms of the score it receives here, but it all is in comparison with the valuation it has. So if we continue further down, we can see that financial assets, which scored 71, well, they're valued at 267 trillion. Cash is 40 trillion. Gold is 10 trillion. Bitcoin is 0.186 trillion. 0.186. So the whole point he's making here, in fact, we can see it here. Bitcoin's value, is under 2% of gold's and less than 0.1% of the value of all financial assets. So he's making the point that Bitcoin might be worse than gold according to him. It scored 43 compared to gold's 62. But it shouldn't be just 2% of the valuation. It's kind of like comparing 2 companies. Let's say you had company A, which had a valuation of 1 billion, and company B, which had a valuation of 50 billion. You wouldn't ask yourself which is better. You'd ask yourself, is company B 50 times better? It's worth 50 times more, so it should be much, much better. Well, Paul Tudor Jones is basically making that point. He's saying that Bitcoin isn't as good as the other assets, but it's valued as if it's incredibly worse. And in fact, he doesn't think it's that much worse. So he sees a real opportunity here. And when we talk about institutional money coming in, I think this is one of the biggest concrete news stories that I have seen in my 3.5 to 4 years that I have been in this market and following incredibly closely. So this is, I can't really put into words how big this actually is. But let's carry on and let's talk about the next thing, which is Reddit using Ethereum for a new token-based point system. So Reddit is experimenting with recording points and perks on a blockchain. As we know, Reddit uses upvotes and downvotes to encourage people to carry out the right behavior. By attaching a monetary system with a token on the Ethereum blockchain, you can introduce crypto economic incentives to basically incentivize people to continue what they're doing, but even more powerfully so. With Reddit being one of the largest web pages, one of the largest websites in the world, this is huge news and really pushes forward adoption. So with these first two articles, we have a great story for the investing side and for the adoption. Now let's talk about some decentralized finance, some DeFi. This is a project, Ren, which I've talked about in the past quite a lot, and I've interviewed the team on 2 occasions. They are trying to bridge the gap between Bitcoin and Ethereum. The intent is to create an Ethereum token which represents Bitcoin in a truly decentralized, trustless way. And if you can do that, then you can successfully start using Bitcoin on the Ethereum chain for applications such as DeFi. Well, they've had their first test where there are 1.24 Ren BTC live on the Ethereum mainnet. This isn't a public test yet, it's just some private people trying this out before they go live. Obviously, they want to make sure everything works perfectly, but it's a great sign for the project that they are moving towards this public launch. Next, we have an article on a very similar theme, and that's talking about WBTC. This stands for Wrapped Bitcoin and is another project aiming to bridge that gap between Bitcoin and Ethereum. The main difference here is that it is done in a centralized manner. Instead of having a truly decentralized, trustless system, WBTC uses a custodian to lock up Bitcoin, and then they can produce an Ethereum token in a 1-to-1 ratio. So it's been interesting that MakerDAO has introduced Wrapped Bitcoin for their stable token DAI. So DAI is obviously supposed to track the price of the US dollar. And it's been interesting because obviously DAI is a decentralized stablecoin, but Wrapped Bitcoin is a centralized way of bridging Bitcoin and Ethereum. So underpinning the decentralized stablecoin, we're seeing more and more centralized things like USDC, and now we're seeing WBTC. So it could introduce an opportunity maybe in the future for a truly decentralized stablecoin, as DAI is obviously decentralized a lot more than something like Tether, but is gradually appearing like it is shifting in that direction, more towards a centralized model. Again, not like Tether, but a more centralized model. Again, the same theme here because we have a lot of projects trying to build this Bitcoin Ethereum bridge. We have the team behind Bitcoin-backed Ethereum token TBTC. So they're trying to do the same thing as Ren BTC. They recently had a shutdown after they found a bug. So it'll be interesting to see how that plays out. And these two projects compete over time. Next, we have DeFiPulse.com. And as we can see here, the market has continued to grow over the course of May. It began on May 1st. At a total value locked up of 827 million, and we're now, at the time of recording, 870 million. So again, DeFi is that one sector in crypto, well, not the one sector, but I would say the one which really stands out as seeing consistent growth month over month. That's why I'm following it very closely and have been doing quite a lot of videos on it. So again, if you want to follow along with that, consider subscribing. Next, let's talk about the Steam hard fork. This is something I've really enjoyed watching for several reasons. The story basically is that Justin Sun decided to take up a large control of the Steam tokens. For those who don't know, Steemit is a decentralized blogging platform with also some video capabilities thrown in there as well. And because it's truly decentralized, you shouldn't have one person trying to take over it. But Justin Sun of Tron has tried to do exactly that. He's tried to accumulate a large portion of the Steam tokens. This worried the Steemit community. They didn't want one single person having such a large control of the supply. As a result, they decided to create their own hard fork known as Hive. And interestingly, if we look at the market cap of these two projects, we can see that Hive is at 96 million, while Steam is at 76 million. So in other words, the Hive platform is a fork from Steemit because one person tried to take over control, and now Hive is worth more. This is an incredible example of decentralized systems and why one person cannot take over and try to control the whole system. On top of that, Justin Sun is a bit of a tool bag, so it's been quite enjoyable to watch decentralized systems prove themselves, and also the person who is trying to take over being a bit of a douche himself, so it's quite nice that he's the person that ultimately lost out from this. It's a great example to show that the community members are more powerful than any individual. This has been the case in theory for a long time, but this is the first time we've really seen, well, maybe not the first time, but the most recent huge example where this is actually played out in practice. The community have said no to an individual, they've created their own version, and now the new version is more popular. Next, we have Telegram. Telegram quits court fight with SEC over ton blockchain project. So the Telegram token and the Telegram blockchain was something that was highly talked about a while back. People are actually asking me all the time when there was going to be, if there was going to be a public sale, would I invest into it? Ultimately, there was actually just a private sale. It didn't go public, but I always said no, I didn't really like the sound of it. Mostly actually because it was just valued at a crazy number, but also, as it turns out, there's been some legal concerns as well. And they've been fighting with the SEC, the Securities and Exchange Commission in the US, for some time, but they're no longer going to be doing that. They're going to be throwing in the towel and maybe for now at least accepting that this probably wasn't such a good idea. Finally, we have Chinese government advisors proposing regional stablecoins for 4 Asian countries. So it is really no surprise if you've been following along with what's happening in the world at the moment. The blockchain currencies for countries are coming. It's a much more efficient way of running your currency. Instead of having the outdated systems of physical cash, you can run it on a blockchain. I'm talking about governments running their own fiat currencies on a blockchain. And Asia looks like the area of the world is really pushing towards this first. So we have top Chinese political advisors have proposed a regional digital currency that would be backed by 4 major Asian countries, including the Japanese yen, the Korean won, the Hong Kong dollar, and the yuan. So it's going to be interesting to see how this all plays out. It could actually push people more towards things like Bitcoin, funnily enough, because the blockchain, if you think about it, is just a tool at the end of the day. Bitcoin, I would say, is a great censorship-resistant tool which puts power back into the hands of people. But imagine the Chinese government, for example, or any government in the world using a blockchain currency. That means they can access all of your data and they can shut off your account like that. They can stop anyone sending you money, and they can stop you sending money with the click of a few buttons. So there will be some dictator-based governments out there that may correlate social media to people and then say, if you've said anything bad about us on social media, we'll shut down your money. Now, like I say, blockchain can be a great tool, but that's an example where it can be used for some serious evil in the world. So it'll be interesting as we move more towards blockchain fiat currencies, whether we also see more emergence and more use cases for blockchain decentralized currencies. That is the last news story that we have to cover. So please let me know what you think of this video. Let me know if you'd like to see it again next month. If you would, please just comment down below and say you've enjoyed it and you want to see it again. If you haven't enjoyed it, you thought it was awful, then feel free to let me know that as well. I'd like feedback because at the end of the day, I want to make the best videos that you guys enjoy the most. So please just let me know your thoughts down below in the comments. Thank you for watching, and don't forget to check out this video here.